Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest all the way from Spokane, Washington. Welcome to the show, Tyler Vinson.
Thanks for having me, Victor. Definitely a fan of your work and the information you put out. So excited to be here.
Well, great to have you here. You're a repeat guest on the show, and it's been wonderful to watch your journey. When you and I first met, we were deep in the weeds on the technology of tokenizing real estate, and we had lots of spirited debate about where the direction this industry needed to go. And I'm super excited to see the work that you've done. You've really approached this the right way. But maybe give a little bit of your backstory and how you got to this point in your journey.
Yeah, absolutely. Well, I'm a real estate investor at heart. I've been investing in real estate for about 25 years. Started out with smaller multifamily and later got into syndication for some larger commercial buildings and storage facilities. And that is where my eyes were really open. That's what I was doing when I learned about the blockchain, and really fractional ownership of real estate has been around, but it is pretty much locked up. It doesn't move around. When I understood the digital ownership component, I would say the next 25 years of investment real estate flashed before my eyes. And I thought, okay, this is a pathway to liquidity for issuers and sponsors, but it's also a whole new way to access for investors that don't normally get into these types of real estate deals. And so I decided that it was the leap I wanted to take, and led me originally to looking at tokenizing real estate and teaching people about it. I think those were some of the first conversations we had. I did not have any intention of becoming a FINRA member, broker dealer, or a SEC registered ATS with the marketplace. There was a lot of people saying that they were going to do that, and I was happy to let them do it. But as we got down the road and we were tokenizing real estate and we heard the industry promising liquidity, we realized that it was pretty much a lie, that there really wasn't pathways to liquidity. There was a couple of digital ATSs, some bigger names out there, but they didn't specialize in real estate, and the entry barrier was extremely high. And so we ended up biting the bullet and going through the entire FINRA member application process to become a digital asset broker dealer, as well as traditional securities. And then that led me to go through all my security license all the way to a 24, so I could step into the CEO role of not only RE Tokens, the parent company, but the actual broker dealer as well.
Well, you and I have a mutual friend who's a securities lawyer, one who speaks English, not just legal. And he says it very eloquently. There's three types of securities. There's registered securities. These might be shares in a publicly traded company like Tesla or IBM. There are exempt securities, and then there's illegal ones. And most people try to play in usually the second one, in the exempt offering space. The beauty of the exempt offering is that you're exempt from registration. It doesn't mean you're exempt from the rules. There's just a different set of rules that apply to those exempt offerings. And it's a different set of policies and procedures and compliance and all the rest, which this falls under. Some of it can fall in the registered space if you happen to be playing in Reg A or something like that, which is kind of quasi in that gray zone between exempt and registered. So let's talk a little bit about how this marketplace is evolving, because conceptually, I think everybody understands that if you can fractionalize real estate, if you can lower the friction, you can generate more liquidity and therefore make the market, the commercial market, expand and more accessible to a larger number of folks, much like Wall Street has done for shares in publicly traded companies. It's really not helped real estate at all up until now. The promise is there. What were some of the things that you needed to do in order to, and I know you're working on a marketplace, but what were some of the mental shifts that you needed to make in order to have this all come together in a way that actually works within the rules?
Yeah, I think back to your original point, to realize that what we were dealing with are securities, almost every time, not every time, there's some few exceptions, but almost every time people are raising capital for real estate, it's a security. And I think a misnomer that a lot of people in the industry had was that somehow technology could sidestep this, or the world of DeFi, if you will, we're going to, get rid of some of the rules and requirements. And I would even argue that they tried that back in 2017. If any of the listeners remember the initial coin offerings that were out there, and that, along with, frankly, a lot of crypto projects, are just a way to try to sidestep the regulation. That's really all it is they thought, oh, here's a whole new way to raise capital without going through all of these regulatory aspects. And it blew up, and it blew up in a bad way. And so the compliance piece is really the backbone. Without it, nothing else stands up on this. So we dove in. We not only had to visit the regulation exemptions for primary raises, which is pretty common in real estate. People are familiar with Reg Ds, 506C, 506B for capital raising and these primary issuances. But what about reselling them? What about investors reselling to other investors? What about GPs even being able to resell those to other investors, including non-accredited investors? And that's a whole new world that real estate's not familiar with. Again, as you mentioned, like the stock market is much more familiar with that, but not in real estate. There really hasn't been a great mechanism or vehicle to do that. It didn't mean there weren't regulatory rules established. And I do think the Jobs Act played a big part. It's just kind of coming to fruition now with some of the tech. But there's something called Rule 144. And just like Reg D is an exemption to registration for a primary raise, Rule 144 is an exemption for the Reg Ds to resell to other investors and even to non-accredited investors. And that's really, I think, where the game changes, is applying the regulatory rules to the resale world and actually building the vehicle that people could fairly buy, sell, and trade fractions of real estate.
Yeah, that makes a lot of sense. Now, when you issue a new security, maybe under Regulation D, maybe it's a 506C for accredited investors, there is an exclusion period where once that raise is complete, no shares trade hands for a period of time. And then after that period, I think it's a year, after that, then it is possible to transact, but not in the open market. There are a number of restrictions. How does this play into that?
Yeah, you're right. Unlike, say, a Reg A plus Tier 2 that we talked about a second ago, which can trade directly on an ATS, there is a waiting period for the Reg Ds once they've sold. And so not once they've issued, but once an investor has purchased those, there's a lockup period before they can be resold. And there's all sorts of potential restrictions around these, and some of them you could make a case for less than a year. But for the simplicity of conversation, it's 12 months. Let's just say it's 12 months. So what happens is after 12 months, then a purchaser, either an LP that's a passive investor in the deal, or even the GP who is the issuer, after 12 months, they can resell that under Rule 144. And there's really 5 very specific criteria under 144, the 12-month lockup period being one of those. And another one is they need to sell on a SEC registered alternative trading system that is run and operated by a broker dealer. And in our case, there's even a digital component to that to be able to sell the fractions of real estate, or what we call real estate tokens. So when we list something on an ATS, there's a full broker dealer due diligence that needs to be gone through, everything from bad actor checks to title reports. And there is quite a grocery list, actually, that we put it through our legal department. But once it's approved, then we're able to list it on that ATS. Both us operating as a broker dealer, the platform itself, and actually you can even program some regulatory rules into the tokens, and then the issuer's behavior and what they're doing all need to be compliant. And that's really our job as a marketplace, is to make sure that's the case, because regulation is important. As much as people want to sidestep that and some of it to go away, in this particular case, and I'm not for over regulating anything, but there's got to be rules to the game that keep the integrity of the game. And one of those big pieces is protecting investors. There's so much fraud and stuff out there that we need to make sure that deals that are available on our platform are compliant under current SEC regulation. And same with the investors that are going to invest. They still have to go through a KYC, know your customer, and AML, anti-money laundering. These are identity verifications to make sure that we know who's transacting and that everything's above board. I would say, with Rule 144 and kind of those 5 pillars, it's typically less strenuous than that initial offering, than that initial regulatory piece. However, you need to make sure that all those rules were followed in the first place so that it is compliant for that resale purpose as well.
So if you blew your exemption on the way in, you don't get to maintain it on the way out.
No, you're going to be into a whole lot of legal work before we can even have the conversation. That's right. And you may have to start all over with the clock. And if you blew your regulation, you might have other things to worry about other than trying to list on an ATS.
Absolutely. So when we think about investing in real estate, especially if we're talking about a syndication, yes, it's possible that someone is actually investing in the real estate, perhaps in a tenant in common structure. Overwhelmingly, these are shares in a limited partnership, membership shares in a limited liability company, which feels more like a paper asset than a hard asset because there's this intervening piece of paper in the middle. How does that differ, or does it differ at all in terms of how you're approaching this?
Yeah, we really are not differing it too much from how traditional syndication is set up with the LLC, or often called a SPV, a special purpose vehicle. And the reason is because there's an operator and they're normally the ones taking responsibility. So let's unpack this just a little bit, because people often say, well, why don't you just tokenize the actual real estate? Or people will make a case that, well, in the future, you won't need a broker dealer or a ATS to transact these because the real estate itself will be tokenized, like the deeds. And that's true. But there's 2 things going on here. Number one is the county recording office needs to be on blockchain before you're tokenizing the actual deeds. And there are some that are doing that in the country. There's the first few counties that are doing that. That's one piece of it. And the other pushback I have with that argument is, if you're going to raise capital from multiple investors, even if you tokenize the deed and have them go into that, you're likely still creating a security by means of the Howey test and other things. Moreover, you're probably increasing the risk exposure to those investors, because now they're on title, now they're on deed, and they could be personally sued or sought after, to where in an LLC or a SPV, the security that you're describing, they're normally a limited partner where their losses are limited to their investment in the deal. So that's why this is an appropriate structure moving forward, regardless if you tokenize the deed or not.
So talk to me a little bit about the marketplace that you're establishing. Where does it fit? Where does it not fit?
Yeah. So I think when people hear there's a variety of real estate tokenization platforms out there. And long story short, they kind of fall into a few different buckets. Many of them are just tokenizing their own portfolios, creating some type of software platform and saying they're a real estate tokenization platform, but it's just a way they're capital raising, and they're adding the novelty of tokenization, to do that. Maybe they're preparing for a secondary market in the future, but but that's really all they have. We've talked a little bit about primary offerings and that, but the difference of the secondary marketplace is it's a marketplace that hasn't existed for fractional shares of real estate, an online marketplace where you can list your shares both as a GP and LP in a marketplace and actually settle the same day. It's very rare that real estate is able to settle the same day. And I think for larger syndicators, they can truly start to monetize their entire list or their entire communities instead of just having a very narrow entry point. So a true online, robust marketplace where people can securely buy, sell, and trade these fraction of real estate in a compliant manner where they have access to all of the information. That's a true pathway to liquidity for real estate.
Love it. Well, Tyler, if folks want to connect, if they want to learn more, what's the best way?
Yeah, I'm on LinkedIn, Tyler Vinson, or of course, our website, retokens.com. And we've got some free downloads where people can get some more information, and you can click into the RE Tokens Capital marketplace there as well and take a look at what we've got.
Awesome. Well, Tyler, great to connect as always. And for the listeners at home, definitely connect with Tyler Vinson at retokens.com as well as on LinkedIn. Links will be in the show notes. And in the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.